All right, good evening, everyone. Welcome to our CAPA Nova event. 欢迎大家来到我们 CAPA Nova 平台。As many people probably familiar with CAPA Nova already, but anyway, I just want to take 1 minute real quick, introduce CAPA Nova. CAPA Nova stands for Chinese American Parents Association of Northern Virginia. 中文是北北华裔家长协会. We are a non-profit organization. We started back in 2021, and over the past 4.5 years, we have already delivered, I want to say, nearly 2,000 seminars, events throughout the years, and it is amazing to have the community support, and also it is really wonderful that we have a core team, including Coach Mike, consistently providing us useful seminars like such. And tonight, it is our financial literacy series. This is a monthly program, and this month, Coach Mike invited his friends Jonathan White to our platform tonight. So I'm going to give the stage to Coach Mike, and he's going to do the introduction. All right, stage is yours, Coach Mike.
Thank you, Yuan. Thank you, Kappa Nova. We are so fortunate. Every month we run a session, have SME, subject matter expert. This time we have ADP, National Office Research, and the Development Tax Credit Specialist, John Wright. ADP stands for Automatic Data Processing. It's one of the largest payroll, employee benefits, tax, payroll company in the U.S. During the government shutdown, right? The Department of Labor is paralyzed. The only reliable data is come from ADP. You guys provide only data, employment data. This is crazy. You become a semi-government.
Right.
Anyhow, so I'm so fortunate to have John talk about research and the development tax credit. Such a new, it's been a concept for years, but we normally don't touch it. But under the One Big Beautiful Bill, the new Trump Act, government encourage innovation, encourage creation. And with AI adventure, with AI just coming to every aspect of life, we need to catch up this, do something creative, innovative, and also get a tax credit and monetize, commercialize your product, and then financial independence as soon as early possible. With that, I'm introducing to John, and it's all yours. Thank you.
Perfect. Well, thank you. Thank you for the intro there, and good evening, everyone. Great to meet you all. So fun fact, actually, Mike, it's interesting that you brought up ADP working with the government. We actually pay 1 in every 5 Americans. So that's why the government uses us for that data. So payroll is our bread and butter, but today I'll go over some information in regards to the research and development tax credit. So I want this to be as interactive as possible. So don't hesitate. If you have any questions as I'm going through the presentation, just throw them into the chat or come off of mute. Don't hesitate to reach out and ask. But without further ado, I will go ahead and share my screen here. And then just let me know when you guys can see my screen. Give me a thumbs up or.
Yep.
Good. Okay, perfect. You can still see it, correct? It's not in presentation mode?
It's a red.
It's the full screen. Yeah.
Perfect.
Yeah.
Perfect. I can't see you guys anymore. So a little bit of history about the federal R&D tax credit. This is a credit that was originally established back in 1981 and was made permanent in 2015. So the overall goal of the credit is to incentivize business owners to do new development or innovation here in the US using some type of hard science, so physical, biological, computer science, or even some type of engineering. When we think about the new development or innovation, sometimes it's a specific product that's being developed. I've worked with manufacturing companies that are improving their manufacturing process, or software companies as well could qualify. What's really neat about this credit in terms of increasing revenue for the business is we can actually retro this credit and do a look back up to 3 years to see if the credit is meaningful enough for the business to maybe claim 2023, 2024, and now 2025 as we move into the next tax year. Whatever amount of the credit that can't be used in that specific tax year can actually be carried forward for up to 20 years, which is huge for maybe a business that isn't profitable quite yet, right? They can carry forward those unused taxes. There's two ways to monetize the credit. The first one is to apply it against the regular business tax liability. So we definitely want the business to be profitable in that instance. The second way is to apply the credit against the business payroll taxes. So employer Social Security portion of FICA. Now, in order to do the payroll offset, you have to be considered a qualified startup. And what that means by the IRS's definition is you're in business for 5 years or less, and you're generating less than 5 million in gross receipts. In that case, we could apply this against the payroll taxes. I'll pause there and I'll see if anyone has any questions.
So this is huge. Are you talking about the employer, the 7.65 portion, right? The employer portion for payroll tax, correct?
Correct. The employer's portion of the Social Security FICA.
That's huge. I didn't know that. That's awesome.
Yep, it is. That's really huge for maybe a startup, right? That's operating in the red, but you're paying wages, W-2 employees to run the business. Now you could recoup some of those wages or some of those taxes that you paid when you run payroll.
Does it have to be profitable or not? Some credit has to be profitable in order to enjoy. How about this one?
For the payroll tax offset, the business does not have to be profitable since we're applying it against the payroll taxes.
Wow, that's very flexible. Jeez,
absolutely.
People come in, you already saved $1,000.
And even with for the regular business tax liability, though, for option one, we do want to see that the business is profitable. If not, keep in mind, let's say there's not a lot of tax liability, right? Or the business isn't profitable. The credit can be carried forward for up to 20 years, right? So even if the business isn't profitable, it sits there in like a piggy bank with the IRS. Cool. Now let's jump into some of the changes that took place with HR 1, also known as the One Big Beautiful Bill. So as of July 4th, with the passing of the One Big Beautiful Bill, businesses can now immediately expense the credit in one tax year. Prior to July 4th, the business had to amortize or spread out the credit across 5 tax years. Now that's no longer the case, right? So if you're eligible for a $20,000 R&D tax credit, you can claim that full $20,000 to offset your tax liability in one tax year. In the event that you're generating less than $31 million in revenue, then we can retro this credit for 2022 through 2024 to help you claim some of the credit that you didn't claim previously. Now, with this credit, a lot of businesses are leaving money on the table. So this credit is one of the largest tax credit programs that the federal government offers, with $20 billion in government spend on this credit in 2022, but only 1/3 of eligible businesses actually claim the credit. So a lot of that is maybe not knowing that it's available, or businesses may think that they don't qualify for the credit. So let's talk about some of those common reasons why businesses think that they don't qualify or that they pass on the credit. So here's what I like to call my Mythbuster slide. So one reason business pass on the credit is they feel that their activities aren't groundbreaking or innovative enough. What's really interesting about the credit is the government actually states that the activity that you're doing doesn't have to be brand new to the world, but it does need to be brand new to your business, right? So that's one Mythbuster. Another one is, we don't track our time or document our work. With this particular credit, the IRS actually states that oral testimony is sufficient in terms of time tracking and documentation. So partnering with ADP, we have a couple of checks and balances, what I like to call about an hour and a half interview process that we'll have with you, and we'll create all the documentation that would be needed for this credit. Another myth buster here is, we aren't profitable. As we mentioned on one of the second to last slides is, the business doesn't necessarily have to be profitable if we're looking at the payroll offset, or on the flip side, you can carry forward any unused credit for up to 20 years. And the last one that I will cover here is this will trigger an audit. So the R&D tax credit doesn't typically trigger an audit. That's something to keep in mind. But with partnering with ADP, we provide full audit support. So what that means is if your business is ever audited by any of the work that ADP has done and stamped our name on, we would actually go to court and defend the audit on your behalf against the IRS. So why do companies pursue the credit? Well, it's simple, right? Reducing tax liability, having a lower effective tax rate, find above the line opportunities, and reduce income tax expenses. So ultimately, I like to call this credit almost like a fun coupon with the IRS. Now, before I jump into the qualifying industries and activities, I know we just went over a lot of information. Does anyone have any questions? Anything I could go back and cover for you?
Mentioned a small business qualified 5-year or $35 million. What kind of a business entity type? Do you think Schedule C will be okay? It has to be S Corp or C Corp? What kind of requirements?
Yep, good question. So it doesn't matter actually whether S Corp, C Corp, partnership. We could do the payroll offset. So
So long as a payroll, you can okay. Well, in that case, many people can do it. For instance, our clients have a home product making facility. They can hire the kids to do the work. They can do payroll them and get a credit. We have special health products, for instance, right? I'm just thinking. I'm sure you cover what kind of qualified activities. That's huge. I didn't even know that.
Yeah, no, that's a really good question. The most important thing with this credit is that and we'll go over this in a couple more slides, but that there's expenses for the business, whether that's wage expenses, 1099 contractor expenses. We could also take a look at some of the supply costs that's gone on during the development, or even the cloud hosting costs for some of our software companies that are out there. So as long as they have expenses in those categories, then there's a credit that we can calculate for them.
That's good. Thank you so much, John. I've been through so many training from national tax professional. Rarely people talk about this because they're very tax savvy. So people try to avoid that. Or professional accountants, they are good at accounting. They don't touch this part. I feel it's a disservice. I didn't know this benefits. It's amazing.
Yeah, and there's some administrative work that goes on in the background, right? And the legislation is also always changing with this credit. So I always, like a lot of accountants, prefer to partner with a third-party vendor like ADP to help administer this particular credit. But very, very good ads. Let's talk through some of the qualifying industries here. So 80% of the businesses that are claiming this credit today fall into these 4 industries on the left-hand side. So software tech, manufacturing, biotech, pharmaceutical, or engineering. But it's not the industry that the IRS is looking for. It's actually the activity that the business is doing that qualifies them. So are they developing a new product? Are they improving a manufacturing process? I have an example here. I've worked with a manufacturing company recently that just adopted robotics and automation into their manufacturing process, which made their process more efficient and allowed the business to reduce their headcount. That was actually qualifying activity for them to claim this particular credit as an example. If there's an invention, right, maybe there's a patent at play, not a requirement for the credit, but definitely helpful, because with the patent, we can see that there's been trial and error to be able to develop this product or process or software. on that note, software is another typical qualifying industry. And then formulas, think about let's say like a paint coating manufacturer as an example, even some breweries testing out different formulas to produce different types of beer, seasonal beers, things along those lines.
I like that. So you have free drink, you get a credit.
There we go. I always like to stop by my breweries in person for those meetings.
This tastes better. So John, this is a good question I have is, you said patent. Do you guys provide I know the patent office PTO can be a very procedural and red tape. Do you provide service to help people get patent?
Not within ADP, but one thing I do personally is I'm really big on networking, right, and building relationships. So I do have a couple of patent attorneys that I work with here in the Florida area, but they can work all over the country. And if there's anyone that needs a patent, I'd be more than happy to do a warm intro, but not something that we handle internally here at ADP.
Gotcha. I know you. We have a lot of CAPA highly sophisticated engineers. They design things. They should patent that, and they can apply all the different credits. Remember our
Absolutely.
Yeah.
Absolutely.
Yeah.
right? Yeah, we have so many people do computer algorithm, design different software, innovation. This is huge.
Yeah, I would definitely encourage a patent. Something to keep in mind that the patent's not required for this credit, but it does
Okay.
help, right?
Does help.
It helps prove proof of concept
Yeah.
ultimately. And it
Well,
makes
I think.
go ahead.
Well,
Go ahead. Yeah. Go ahead.
yeah, Jonathan, you mentioned, for the qualified industry, it doesn't mean the business entity registered as software tech manufacturing or the list you have here, but the activity or I mean, in other words, say if you have a small crop registered under education,
Mhm.
but they're doing some software development, it can still
Yep.
qualify for this?
Absolutely. It's all about the activity that the business is doing, not
Okay.
not their industry. And I'll actually give you two examples here. It's a very good question. So I worked with a recruitment company a couple of months ago, actually, over the summer. And when I took a look at their website, I remember thinking like, wow, why am I taking a meeting with them? Because they're not going to qualify for this credit. They're just helping people get placed at a job, right? But one thing I noticed is on their website, they advertise that they can help people get a job within 24 hours. So I took the call. Within, I'd say 5 to 7 minutes of having a conversation with them, I actually uncovered that they developed this software for data analytics, basically like an AI software that could scrub the resumes that they already had on file and cross-reference it with the new job posting that they just listed and automatically send qualified candidates to that job posting. And so
Wow.
for
Can you give me my daughter looking for a job? I need that.
yeah, there we go. I can definitely introduce you.
Exactly. Let's connect the business.
Let's connect. Forget about tax credit. Get a job.
There we go. We could connect offline, definitely. But
Yeah.
in that example, looking at their website, they don't fall into one of these industries, right? But they developed this software that ended up qualifying them for the credit. Another example that I have is I worked with a drone aerial surveillance company. So they're more of a service-based industry. They survey land before new construction can start. Well, what they did as a part of what they do on a daily basis is they developed a sensor, a piece of technology that could detect methane gas leaks from the drone in the air. And you can't smell methane gas and you can't see it with your untrained eye. This actually helped them get awarded government contracts to do mass production of these sensors but that one sensor was a qualified activity for them. This is a 7-man company that had been around for about 4 or 5 years or so. They qualified for a $27,000 credit for just one tax year. And they had been building that piece of technology for about 2.5 years. So another example of just looking at their website, didn't think that they would qualify, but when they have that activity, that's what the IRS is looking for.
That's interesting. It seems to, this R&D definition can be really broad. And same with manufacturing. What does it mean, in terms of activities under manufacturing? Can somebody say a homeowner business and say making candles, small crafts, but has a special function, alleviating the pain and whatever, you claim for it. Can that be qualified for manufacturing R&D? And
that's a good question. So that actually brings me to my next slide here.
Oh, okay.
So this is called the 4-part test. Now, this is not ADP's test. This is actually the IRS's test. So in order for a business to qualify, they have to meet all 4 parts of the test. So starting with number 1, with the permitted purpose, the activity must be related to the development or improvement of either the functionality, performance, reliability, or quality of the product, right? So the candle in that example, if they're using, let's just say, like a tried and true method to make the candle, but theirs just has maybe a little bit of a different scent, then it's more aesthetically based, right? It's not really related to functionality, performance, reliability, or quality. On the flip side, if they experimented with different formulas for the wax, as an example, so the wax could last longer, right? So the functionality was improved or the quality was better, then that's something that we can build from. Does that make sense?
Yes, that's interesting.
The second part of that too, to keep with the candle example, is it has to be technological in nature. So there has to be some type of hard science behind it, physical or biological science, engineering or computer science, right? So I would argue that it may be a little bit challenging to meet step 2 for that example. But just something to keep in mind. And that's part of why we have certain processes in place at ADP to make sure we're not missing anything for one, but that we're also capitalizing if or maximizing if they do qualify for the credit. Step 3 and step 4, I normally couple these two together. Ultimately, the IRS wants to see that there's some economic risk for the business, and that there's some type of trial and error, right? So it's not that when the drone aerial surveillance company went to create this sensor that they were able to create it the first try. The IRS wants to see that there was multiple iterations before it was actually a fully functional product, which I think that's huge for a lot of startups, right? Like think about a software company. They haven't released their software yet, but they're paying employees and they're still in the testing and beta testing phases. This is huge for them because they have proof of concept and they're paying wages, and now they can recoup some of the money that they spent in wages over time. Did that help kind of answer the question for the candle?
Yeah,
it helps, but really we need you need to provide sort of a use case or template. People never done that, right? How do you prove they're trial and error? How do you prove this is conceptualization? For me, it's like a little bit complicated for me.
Yeah, and that's why we work together, right? So within ADP, we do about, I'd say, an hour to 90 minutes of an interview process with the client or the developer or the business, and then we'll take that information and create the documentation. but it's
Oh,
all
you guys will create. Okay, you don't need a. Do you guys visit the plant, the facility? No. Okay, you just interview.
nope.
Okay. Oh, all right.
It's all oral. It's all oral testimony. We will take a look at the last 3 years of tax returns and W-2 history, if applicable, right? If they have 3 years worth, then we'll take a look at that. Let's say we have a 10-man company and it's a software company and there's 4 software developers. We'll look at 10 employees still, and we may determine that there's 2 employees that actually helped out during the testing phase, so we can allocate a percentage of their wages towards the credit. And I'll go over that on the next slide as well.
That's interesting.
This is awesome. This is awesome.
Awesome.
Well, we do
So
have
let's
questions coming in, John. Can I
oh,
read the
go ahead.
question?
I can't
First
see the
question,
chat.
Joy has a question. Does it need to be a patented? I think your answer is good. It helps. Does it need to be document all the details? Then possibly have to release the credit. Oh, do you have to release the secret sauce to the to you guys or to the IRS or?
The more details, the better. Once we do our hour-long technical interview with you or the client, we can have you, if you prefer, we can do like an NDA, right? If you don't want any of your information going out there. We're a very secure company at ADP, so it's not going to be leaked anywhere. But keep in mind, we do have to have the interview process for us to create the documentation. And what we won't see going on in the background is once we're done, is ADP produces about a 30-page document that we'll submit to you to turn into your CPA or your accountant to have this applied on your tax return. So that's what I mean, that we'll create all the documentation. And it's not that it's audit proof, but we'll defend any of our work if there is an audit from the IRS. So it's pretty risk-free for you as a business owner. Hopefully that answered your question.
That's good. Thank you. And the other question from KP said, how about a real estate business? It's more like a passive income, not active. Is that a business start to use AI application to qualify credit? Something people in the real estate investment, do you think that's qualified now? What do you think?
So if you're buying the AI software from a third-party vendor, then that wouldn't be the qualified activity. But let's say you had some economic risk, so you put some money forward to have someone develop the AI software for your real estate business, then you could qualify for the credit.
Okay. KP, talk with the John after the call. Make sure you want to know the situation. Yeah.
Perfect. Cool. So going into the expense categories, there has to be expenses in order for us to calculate the credit, and the expenses need to fall in one of these 4 buckets. A bulk of the credit, probably 80% of the credit, is made up from the wages, right? So the wages can be these are W-2 Box 1 wages that are paid to employees that are performing the R&D activity, supervising the R&D activity, or supporting the R&D activity, the development, right? We can take a look at 1099 contractor expenses, similar, that are performing the R&D development or supervising or just supporting. We can also look at supply costs. These are raw materials, so not equipment cost, and specifically the raw materials that are used during the development stages. And then for our software companies, we can take a look at the cloud hosting cost. A lot of software companies use like AWS, Amazon Web Services. We'll look at what's being hosted on that cloud and allocate a percentage of the funds that are paid to the services. Let's say 15% of those funds are during the development stages, and you can recoup a portion of that. We'll take these 4 categories, we add them up together, and the credit's anywhere between 6 to 8% of whatever that number may be. So I'll pause here. Usually there's a lot of questions here.
So you said 6 to 8%. Is that sort of ballpark number? How do you get this number, 6 to 8?
Yeah, so this is how there's like a lot of math calculations that the IRS has in place, and then this is the average of what the credit amount ends up being based on ADP's data, right? I've seen some software companies in California, as an example, that have gotten closer to about 10.5% of a credit. So it varies, but 6 to 8% is a pretty safe and conservative average.
Good point.
And
There's
this is
four type wages contractors. So 1099 people, 1099 also qualified, right? That's good. That's good.
correct. And keep in
Yeah.
mind, this average is considering the federal R&D tax credit. Some states offer a state R&D tax credit as well.
Oh,
So
you can
that
double
could
dip. Mm.
exactly, you can double dip. Like I'm originally from California. So this R&D tax credit is huge in California, right? Because the state taxes are, you know, they're pretty huge in California as well. So a lot of business owners are looking for ways to offset. So in California, as an example, it's probably another 3 to 7% of a tax credit on top of this 6 to 8, a state tax credit.
Yeah. So I'm just thinking my clients sometimes they have to purchase a special vehicle to carry the 3D printing. Our client have 3D printer. Do you think
Mhm.
all this specialized vehicle qualified or not?
So you mean like the 3D printer itself, or
Yeah,
the
yeah, yes, the printer itself, and also he has to buy sort of a special truck to carry all the things so he can go to different client sites to make production there.
yeah, I don't think it would qualify, right? Just based on it wouldn't fall, like the truck as an example, wouldn't fall into any of these specific categories. Maybe in the supply category, but keep in mind we can't use equipment, and it would probably fall under equipment.
Oh, equipment, yeah. But equipment, they can do different, they can do bonus depreciation 179. They get their covered anyway, right? Yeah.
Right, right. And 3D printing, I've seen, I don't know the specific cases off the top of my head, but I have seen 3D printing is a little bit of a gray area right now. It's a bit newer, and ADP for the most part has shied away from it,
Hmm.
just because it's a little bit newer. I personally would argue, they're testing different materials to do the 3D printing and things along those lines. But for some reason, I haven't been able to get those approved.
Mm, interesting. Yuan, do you know any friends have this doing manufacturing?
Well, that's interesting when you mention 3D printing. Nowadays, even construction business use
Mhm.
3D printing to manufacture houses, and especially for the outer shell. Even though it may not be for mass production, but there are actual applications for that. But I guess you will just argue, for the business case by case, depends on how and what they're going to use the actual equipment, right? Yeah.
Yeah, it's definitely a case by case basis, and typically, if it's a little bit of a gray area,
Mm-hmm.
I have a team of tax directors that they're accountants or lawyers, as an example, that I can bring on to the project scoping call to make sure that I'm not missing anything, because ultimately they would be the ones to sign off and go and
Mm-hmm.
defend if the work was ever audited, right?
Yeah.
I worked with a dental office, and we actually went back and forth for a little while because I believe that they would qualify, and the dentist thought that she would qualify as well. And the reason being is they were doing temporary retainers and crowns using 3D printing, and
Yeah.
they had to test different formulas to make sure that the retainer would fit properly and that it was functional and that it was a good quality. But once she spoke with our tax directors, unfortunately, we decided to not accept that particular project, which, to be fair, is okay, right? Because we want to make sure any work that we're doing, we're within the letters of the law. And, to this date, ADP has been processing the R&D tax credit for over 10 years now. We have a less than 1% disallowance rate with the IRS. So
I see.
there's
That's
a
nice.
reason we're not accepting those projects, and we just want to make sure we're doing right by our clients.
Good track record. Yeah.
Yeah, because I've never done that, we don't touch it, but definitely need a specialist like you guys. Otherwise, we don't know what they're doing. But Jonathan, can I ask you one question? Is
Yes.
you after call, I know you have some template, 30. I don't want to give us this. At least give us a framework. What kind of document you want our small business owner provide, so they can. Year is coming. They need to prepare. Right? They have a few weeks to do it. If you can give us some framework, we can share with my clients.
Yeah, definitely. Let me take a look here. I actually have it right here.
Oh,
so you can see my screen, okay? Oh, wait.
Yes.
Building cycle, client flow, yeah.
Cash flow,
Here? Okay,
focus.
perfect. Yeah, billing cycle, client flow. So very easy to get things started with us. All we need to get started is your most recent year's tax return. So, 2024 tax return. I would need to do a quick phone call with you. So I need to have what we call a project scoping call. That's anywhere between about 20 to 40 minutes, just depending on the complexity of the development that's taking place. Once I do that project scoping call, I find that you should qualify for the credit. That's when I'll request your most recent year's tax return. And then I will send you over a service agreement to allow ADP to begin working on the credit study. For credits that are less than $50,000, we charge a 25% fee, and that is billed over 3 separate quarters. So it's not all doing one lump sum. It's broken up over 180 days. Once I have that service agreement link from you signed, then I can schedule you a call with one of our subject matter experts that will actually produce this documentation on your behalf. And we'd schedule an hour-long technical interview to discuss the development that's taken place for 2025 or prior years as well. After that hour-long technical interview, your work with ADP is done, right? So that's when our team is working in the background, producing all the documentation. Takes us about 4 to 8 weeks, depending on the complexity. At the end of that 4 to 8 weeks, we present our findings to you. It says 30 minutes here on the screen, but it's usually just a simple email. Hey, Coach Mike, we actually found that your credit was $30,000. How does that work for you? Coach Mike's like, hey, Jonathan, I appreciate it. Go ahead and move forward. Cool, we're good to go. And that's when our billing begins. So those 3 separate quarterly installment payments. So nothing's due to ADP until we produce the final credit.
Hey, John, may I ask a question?
Yes, of course.
Hey, let's say if the research development lasts more than 1 year, do we need to go through this cycle every year with you?
Very, very good question. The first year is the most challenging in terms of getting everything started and going through the process, getting us the documents that we need. After the first year, all we would need to do is have a 30-minute interview with you to learn about the development that took place in that specific year, and then we'll produce our documentation again. So since it is a permanent credit, as long as you have that qualified activity, you can claim it year over year, and we just need to make sure we document that new activity.
In terms of the qualification, let's say if I develop something for my own firm use, or does it qualify, or does it have to be serving general public, serving other people?
Very good question. It depends on the functionality that you have when you say for your own firm's use, right? So if it's deemed normal administrative task, let's say sending out appointment reminders to your clients, then unfortunately the IRS wouldn't qualify that for the credit. But on the flip side, if it was for those administrative tasks, but you were also going to sell this to other firms, then that would qualify. So it has to be intended for some type of public use.
Okay, thank you.
Good question.
Before a client pay you, you at least tell them they are qualified or not. At least they know what they get, right? Make sure.
Correct. So on that initial phone call, I can provide a ballpark estimate. I'm usually within 12%, give or take, of what their actual credit would be. So I'm more or less the expert in pre-qualifying the business for the credit. By the time they're done talking to me, we'll know if they qualify or not. It's just about finding out what that specific credit amount will be once we get to the end of the process.
So consult, if you decide this is not going to fly, then the client is not going to, they don't have to pay anything, right? Just make sure they don't.
Correct. So let's say I do the scoping call and I determine that they're eligible, and then I introduce them to their subject matter expert, and the client decides they no longer want to move forward, then they don't have to move forward. There's no contract or anything like that. All we ask is that if we actually begin the credit study and we have the technical call, then we do ask that you pay us for the work, right? But there's no contractual obligation. Good question.
So Jonathan, just again, help us for your role. Are you, I mean, as attorney type of lawyer, making this kind of judgment and say this is a qualified R&D research, and you can send it to your CPA? And I mean, is that what's your role? I'm just curious, what's the IRS is looking for the credential or the qualification for people who make this certificate document?
So for myself, I actually studied psychology in school.
Okay.
Actually, organizational psychology, so more of psychology for business. So I'm not a lawyer or an accountant by trade, and this isn't legal advice by any means necessary. This is kind of like a public document that I can share with everybody. But I will say on that note, so I might have mentioned this earlier, but ADP, to produce the actual credit study, we have a team of over 250 dedicated tax credit specialists.
I see. Okay.
Those are attorneys, lawyers, engineers, software developers, just subject matter experts that are producing this documentation on our behalf in the background. And because we use that team of experts, that's why we back all of our studies with the full audit support. Now, with this being a permanent credit, the benefit of also working with ADP is, once we produce your credit the first year, you'll actually continue to work with the same project manager year over year over year. So the process just becomes a lot easier. You build a relationship with your project manager and so on and so forth. A lot of people look at ADP, as we mentioned at the beginning of the call, as the nation's largest payroll provider and one of the largest payroll providers in the world. But we're actually the nation's largest tax credit processor as well, and have over 45 years of experience. And since 2021, we've actually captured just under $4 billion in tax credits for businesses, not just the R&D credit, right? There's over 3,000 tax credits that are available for businesses that ADP can help support, just depending on the size of the business. Long-winded answer, but hopefully that helped answer.
Yes, I understand now. Yeah. There's another question. The ADP fee is 25% of R&D credit discovered. Is it possible that taxable income still exceeds the ADP fee after applying the credit?
If the credit would exceed the ADP's fee, or the tax, let me see if I can.
Yeah, I believe that's typically the case. You have to have more.
So as we go through our process, I'm trying to bring up the chat here. As we go through the process, we love to work, proactively with your accountant or your accounting team, right? And the reason we like to do that is we want to make sure that this credit makes sense, that it's a good decision for the business long term. Excuse me. So if it were to, exceed let's see, is it possible that the taxable income still exceeds the ADP fee after applying the credit? What do you mean by that? So that the taxable income still exceeds the credit? So the tax liability is greater than the actual credit amount? Is that the question? So that could happen. Let's say the business owes $10,000 in tax liability, but we only found a tax credit of $3,000. That $3,000 would eat away at the $10,000, but you still have $7,000 of tax liability remaining. So think of it as like a coupon in a way. On the flip side, let's say we found a credit that was $10,000 and you only owed the IRS $3,000. That remaining $7,000 would sit in a piggy bank with the IRS for up to 20 years because the credit is greater than the tax liability.
So it will be largely depends on the CPA determine how much tax you have to be responsible. Yeah.
Yeah, and like right now for a lot of our accounting partners, it's the beginning of the busy season, right? We like to call it tax planning season. Same thing for me because this is a tax credit. So right now I'm meeting with a lot of my accounting partners to sit in and be a part of their tax planning strategies with some of their bigger clients, right, that are looking to offset tax liability because we want to make sure that we can maximize this credit. And if there's ways that your accountant can move money around and utilize this credit as leverage, then that's what we want to try to do. Right, Coach Mike?
Yes, we definitely, there are so many, I need to see how the sausage is made because there are tax form we need to file, right? I forgot 7984, something, remember that some
7, 8, yeah.
something like that. Yeah, I know about it, but I don't know. Definitely need some hand holding from you, your partner to show us how to do it. Yeah.
Yep, definitely. We're here to help, and yeah, I'm happy to. Is there an email thread where I can send out my information?
You can put it in the chat room if you will, or you can share a
Oh, that's right.
screenshot. You have your name and the email. People can take a picture from this. Yeah.
Good call.
So people don't do it DIY. Don't use ChatGPT to create this because sometimes they give you wrong information. You need the professionals. Some party can do ChatGPT. This I don't think you need that. You definitely need professionals. Yeah. All right, sorry,
Yeah,
Jonathan. Yeah.
I would agree. There's a lot. I'll be fully transparent. There's a lot of AI softwares that are popping up that claim that they can help you claim this credit. Keep in mind, ADP has been assisting businesses with these credits for over 45 years, and we back these studies with full audit support. So as your business continues to grow and you continue to do more development, the last thing we want you to do is be susceptible to an audit from the IRS. We want you to focus on, growing your business, growing your baby, and if ADP can be a partner along the way, whether that's for tax credits or payroll or workers' compensation, that's what we're here for. Perfect.
Nice.
That's all for me.
Oh, thank you. Thank you. Appreciate that. I think that's good. People have any questions, feel free to ask. Every month we have a workshop Sometimes I run this, sometimes invite specialists. Next month is last month, right? Yeah, for this year, we'll do from the tax planning perspective, we'll do some case studies I'll run some case studies. And also we have KDP have a retirement specialist, right? You have a 401k specialist, you have health insurance specialist. I really want you guys give us all your full service. I constantly people ask me, small business is how, look at this shutdown. The whole point is Affordable Care Act, the premium, right? The whole thing's tail this. A lot of small business owners, they are really suffering from the premium, just like uncontrollable cost. How can you do a tax optimization? I know some, but not all. I need an ADP specialist to help us on this.
Yeah, we do a little bit of everything. Anything to help keep your business going from an insurance standpoint, retirements, benefits, tax credits. We're definitely here to help and be a resource. So don't hesitate to reach out. That's actually my cell phone number in the chat. So I always like to say the R&D Tax Credit Hotline is open 365 days a year. So shoot me a text, give me a call. I'm more than happy to be of service.
That's awesome. Thank you.
Thank you guys. I appreciate the invite. This is great.
Okay.
Yeah, exactly. Jonathan was really appreciated the information. Again, this is such a new subject to all of us, and I'm glad Coach Mike invited you. And as we move along, hopefully we will have just look at the overall job market. I'm pretty sure more and more people are going to start thinking about, starting their own business and using whatever sort of innovative ways to gain that niche market. And this R&D tax credit is going to be very helpful to many people, many small businesses especially. So anyway, we will keep you posted, and if we have other this kind of education sessions coming up. But in the long term, please feel free shoot us email, reaching out to us, especially if you feel Yuyan or Mike, we found a new tax code and this is going to be really interesting. Shoot us an email and we will prepare a session especially for you. So consider this is your client base potential. So it's going to be a lot of fun.
Yeah, no, help small with the AI take off so many all the big companies laying out people left and right, right? Look at this.
Yeah.
Small business is the future. If you want to be profitable, sustainable, you have to provide a value, to the society. Then research and experiment is the key, right?
Yeah.
Yeah, I really want people, especially young people, could not find a job because all this AI thing. Then try to do something in your basement. That's how Steve Jobs starts. And then ask Jonathan to get your guy to go through out of the garage.
Absolutely. As long as you pay yourself a wage, we'll find you something.
There you go.
Yeah, I found that we need to change the mindset. The typical 9 to 5, yeah, it's still there, but definitely it's not. It's disappearing. It's fast.
Yeah.
Sorry, guys. It's very young people. I don't know. Education is important, but if you just focus on structure, 4-year college, 2-year grad school, you may not get there.
Yeah.
Yeah.
So anyway, everybody, please, if you have any other questions, please, just speak up and post your questions. We still have roughly about 5 minutes.
Yeah. Yeah, can you talk about your annual gala? Make sure people can come.
That's right. Yeah. Just want to mention to everybody, we have Capanova is going to host our year-end celebration on December 6th. It's a Saturday, and it's going to be at Fairfax Government Center, and it's in the morning from 10 to noon. It is, one of the biggest event for our Capanova. So I really wish everybody can attend, and for our guests, especially, do CAPA also? CAPA, C-A-P-A. CAPA also help apply for federal grant support and VC. Well, that is an interesting question. We have some attempt to go through that process. And unfortunately, we were not very successful at this point. But, again, it's a matter of keep trying, keep pushing forward. But we do intend to work with some experts, from other organizations and try to continue pursuing in that direction. But we will keep you posted if we have some kind of training sessions coming up. Does this answer your questions, Bill?
Oh, Bill asked a question about the federal grants. Okay, I gotcha.
Yeah. Okay. Okay. All right.
Yeah. So two more things. I'll go to the gala next week you can read the Saturday of December 6th. I'll be there. I'll have a small booth, share some ideas with my book. If you want to buy it, go ahead. If you have tax questions, I'll be happy to answer.
That's right.
Yeah,
And our Coach Mike is going to have a special booth, and we're going to do book signing and also giving free consultations if people have questions regarding their tax. So are there any other questions? Okay, if not, we're going to close our session for tonight. And once again, thank you, Jonathan, and thank you for all the information. Please feel free to share your PPT with Coach Mike, and he is
I already got it.
going to-
Yeah. Yeah.
Yeah, he's going to distribute to his mailing list. And for everyone, we have our recorded session on YouTube channel. So for anyone wants to review what Jonathan has taught us, feel free to go to our Capanova YouTube channel. All right. I believe that's the end for tonight. And thank you, Jonathan, and thank you, Coach Mike. Thank you, everyone, for your, yeah. Good night.
Take care.
Yeah, good night.